Hey guys, it's Wave618 here. It's 10th of January 2018, and yeah, it's just gone 5 p.m. GMT. So we're going to do an update on Bitcoin today. So we've got here the daily chart of Bitcoin. Yeah, in this video, I'm going to look at Bitcoin. We'll have a quick look at Ethereum as well, two really leading benchmarks for cryptocurrencies. And I do feel like that what happens in crypto will largely depend on what happens in the equities. So we're going to have a quick look at the Nasdaq, S&P, and Dow Jones. They're brilliant benchmarks for equities. So we're going to have a good look at what's happening there also. Yeah, and we'll take it from there. But so first of all, I'm going to show you my long time frame count, which is this WXY. So W, 3 waves down, X is a descending triangle. You've got your descending highs here, your flat base, and then we've got another 3 legs down to make our Y wave. Now, I have been saying for some time that my target was 3,000. Well, initially 3,200. We did slightly surpass that, going to 3,100 or just above. But yeah, I do feel that we will eventually tag 3,000. We don't have to. It doesn't have to happen. But I've still certainly not ruled that out. It's what I'm thinking is still probably the most likely scenario at present. That said, it doesn't have to happen. Yeah, I feel like we do need to see another move down. I want to see more volume come in. That said, there is a lot of negative media occurring around Bitcoin, or not Bitcoin, cryptocurrency in general. A lot of hacks being talked about. This is the kind of media attention I was expecting when you see a Wyckoff accumulation phase will be dominated by negative media releases. So yeah, the fact that we're seeing that negative news is reassuring. It's saying that it's suggesting that we may be starting to see accumulation. So yeah, that's certainly a good news for Bitcoin and other cryptos. But I would like to see a bit more volume come in. Just quickly look at volume. So we're still seeing declining volume here. So yeah, so that's my long-term count, the WXY, where Y is in fact a 0.382 extension of W, which would have brought us to 3,200. That's why that was my main focus. But I do think we might have a second X wave followed by a Z. So this second X wave could, well, I'm thinking at present that it could at least come up to this upper median line, maybe even up to the upper warning line of this pitchfork. So let's talk a little bit about the shorter time frame price action here. So yesterday I did put a tweet out, and I basically said, because we were hovering around here, and I wanted people to be aware that this was a significant resistance level. So I posted on Twitter saying I wouldn't go long until we break above here and retest this order block line. Then you could think about going long. Because if you watch my last video, I was talking about this looking like 5 waves up, and then I wanted to see an ABC down, where this was A. I was looking for like a zigzag with this being A, B, C. Obviously B wave came quite high, and now C wave has come down to where I wanted it to come down to. Let's zoom in on this. So we're on the 4-hourly. So I wanted it to at least hit this 61.8% retracement of the low high. So here's your low to your high. Oops, sorry, wrong tool. So low to high. So we tagged our 61.8 here, and it came down quite dramatically, as you'd expect in a C wave. So here's your 3 waves down. 1, 2, 3. That's A. Yeah. So it's looking like an ABC. So really, it should be a 535. But the alternative is it could be a WXY. for WXY like that. Either way, we've hit, it looks like a very corrective pattern to me. We've hit our 61.8, which is what I was looking for. It then sets up this inverse head and shoulders with your left shoulder, your head, and your right shoulder here. It's not a true inverse head and shoulders, as in it's not a reversal pattern. The reason being is because of the volume. If we pull up the volume here. So really, if it was an inverse head and shoulders, the maximum volume should be at the head. And I'd say the left shoulder probably has more volume than the head. So I wouldn't call it a true reversal pattern. But that said, it can still, go up from here. But I don't think it's going to mark. This is marking out the bottom. If it was marking out the bottom, I'd expect more volume here than here. And that's why I do feel that we're going to go up from here, but we're going to be coming back down again to probably test 3,000. That's the way I'm looking at things at present. So let's just clean that up. Let's take volume off. So you can see here we've come down to, with the right shoulder, we've come down to the same level as the left shoulder. We're also testing this median line, and this median line belongs to the pitchfork of, it's called the daily. So this pitchfork is plotted on our Y wave. So the Y wave is made of 3 waves. That's our first wave, second wave, third wave. So when you've got your first 2 waves in, you can plot your pitchfork using your first pivot here, second pivot at the end of the first wave, third pivot at the end of the second wave. Then you get your pitchfork. You can see that prices bounced off these levels nicely, come all the way down to the median line, lower median line, median line, lower median line, median line, and then it's hovered around the median line. Now the question is, will it stay above or will it come down further? I'm of the impression that we're going to go higher from here, but we're going to have to wait and see. So so we bounced off this level here. You can see there's an order block in here and some interesting highs here. So I believe that is another reason we found resistance there. So if we just plot on the 4 hourly, let's plot an order block. So if we incorporate the bodies of these candles, I'm going to color it blue. That's the color of the order block I use for the 4 hourly chart. Now we can fine tune it a little bit. Let's bring it across. So you can see these bodies were formed following this spike up here, and these lows is also in keeping with this close here and these spikes here. So it is a significant level. We went right into the middle of this order block and bounced up. So yeah, if you were going to go short, certainly I would want to wait for this order block to break, let it break, retest, then look to short. That's what I'll be looking at. Personally, I'm of the opinion that it's going to go up from here. Yeah, so let's go on our daily again. So as I say, this was looking like 5 waves up. We've had our correction. If we plot an Elliott wave count for an ABC, that's A, B is down here. So our C could take us to a 1-to-1 level, or even a 0.786 level up to our upper median line, or even we could come up to the upper warning line. That would be an amazing opportunity for a short if we did come up to the upper warning line, and it could, perhaps hit the 1.236 or the 1.382. Yeah, that's something to look out for. But as I say, at present, I'm leaning bullish, at least short term, up to around here. Then I do expect us to come down one more time, probably to come around to around 3,000. And if I was if this move breaks down, I'd be looking for this order block to break, and I'd be looking for a retest of that order block before going short. Okay, there's another thing I want to show you. It's quite significant. So this is one pitchfork. Let's just, in fact, there's another very significant pitchfork to look at, this major one. So let's suppress this smaller one here. So this is the larger pitchfork, and this is made from the larger time frame. So you got your first wave is W, second wave is X, and so then you can plot your pitchfork using those three pivots, and you can see here that we came down very nicely to the median line, actually breached through it, and the place that we found a bit of resistance here, you can fine tune your pitchfork, and if we look at the 0.5, you can see resistance was found really nicely at those levels, almost to the point. So the 0.5 gets hit really nicely here and here. So this is something to keep your eyes on. Also, you'd want to see price break above this 0.5 level. You can see how nicely these levels are being respected, which tells us that just through reverse engineering that this pitchfork is significant, and it tells us that this Elliott wave count is significant. So yeah, I thought I'd point that out because that's hit that really nicely there, that 0.5 level. Alright, so let's just take that one off. I know we can leave that, but let's just suppress this pitchfork. So yeah, for Bitcoin, I think that's essentially what I wanted to cover in this video. On Bitcoin, I mentioned we'd look at Ethereum. Let's have a look at Ethereum. So with Ethereum, again, a very nice pitchfork. This is how I've drawn the WXY. Probably looks quite warped in the sense that W and X are small. That's because we're on the log time frame. If you come off log, you can see it looks like it makes a lot more sense. This is W, X, and then Y is a three-wave pattern. 1, 2, 3. But yeah, it's important you're on the log chart because otherwise your pitchforks and trend lines also get warped. You can see it's come out of the pitchfork if we're not on the log chart. Whilst on the log chart, all fits in very nicely, and I really do like this pitchfork. The price really respects these lines really nicely. So you can see here, ever since it was drawn, this I think was just 1 month of data from January through to February 2018. So for the next year, prices really respected this pitchfork. So they are very handy. So you can see we came down median line, a little bit of support, then broke through lower median line, back up to the median line, lower median line, then broke all the way through up to the upper warning line, hovered between the upper warning line and the upper median line before breaking down to the median line again a couple of times, and then here, this is probably the 1.5 it found resistance at. The fact that it went to the 1.5 and not the 2, which is the upper warning line, tells us there's weakness in the market here, and that's why we came all the way down to the lower median line, and it came down pretty sharp. So that was a sign there, because really price should be going between these lines. It should be hitting the upper warning line. The fact that it didn't reach that, it came down below the lower median line, tells us that this market's really lacking potential, and so it came down sharp. Then you can see we came up to the upper median line, a little bit of a bounce, only down to the 0.5 level here. It's probably about the 0.5 on the pitchfork, which is a sign of strength. So then we kept going, but then again not reaching the upper warning line. We've come down now, and we're testing the upper median line to the cent almost. So look at that. You know, you can't get much more accurate than that. Let's see if it holds. As I say, Bitcoin looks like it's found a place where it might start moving up, and Ethereum looks to be at a level of support with this pitchfork also. just a bit more on Ethereum, because I know a lot of people are interested in this chart. So we came down, we tested the 94%, the 94% fib retracement, hit it pretty nicely. Also landed within this order block here. You can see this consolidation that preceded this sharp move up. So we hit the base of that order block. That was best seen on the 4 hourly, that's why I coloured that one in blue. So yeah, I drew it based on the 4 hourly. So yeah, that was the support there for Ethereum. So the base of this order block hitting the 94% fib retracement, and also the lower median line of the Pitchfork. So that's essentially my strategy. I look for confluence between Pitchforks, Elliott wave, and order blocks. Just because they're non-conflicting indicators, they're all looking at different things. Elliott wave is looking at sentiment, order blocks are looking at price, and Pitchforks incorporate time. So I think it's an excellent triad of indicators to use. Okay, so that's Ethereum. As I say, looks like it may have found a little bit of support there. We'll have to see if it holds. And then we want to look at the general markets. So there's a lot of uncertainty in what's happening in the general markets now. So I'm going to pull up the Nasdaq here. A lot of you have been asking for a bit of analysis on the general equities markets, so I thought I'd throw it in with this video. I probably will at some point do a video exclusive to the stock market, just because there's a lot that can be said, and so I'm not going to go on too much in this video. It is really a Bitcoin video. So, but that said, I think the cryptocurrency market will be dependent upon the stock market also. If we go into recession, that's going to have a widespread effect on other markets. So it's good to understand. Now, so I've made this 5 waves up here, and this is back from the post credit crunch. So this is wave 1. Wave 2 is a running flat, A, B, C. Wave 3 up to here. Wave 4, wave 5. And I'll support that with Fibonacci. So wave 1 comes up to here, A, B, C. So your wave 3 starts here, bring it across. So you see it comes up very nicely to 2.618. So very nice Fibonacci relationship with wave 1. And then wave 5, I always like to look at waves from the genesis all the way up to wave 3 and extend that from where wave 4 finishes. And you can see we've come up to the 1-to-1 level. So basically what that's saying is wave 5 has a 1-to-1 relationship with the genesis through to wave 3. So it's a very nice 5-wave setup that I can see there. And that's why you've got to start looking for retracements. Now, you can see also during this Pitchfork, we also found that price bounced off the median line. So it was an excellent short. You can see we've come down, but now we've found a little bit of support here. Okay, so we came down beneath our lower warning line, suggesting that the uptrend had been broken. We've actually come quite nicely back within it. Now, there's a couple of order blocks I've drawn here. So first of all, we're on the daily time frame, which is the time frame I use for the red blocks here. So you can see the reason I've drawn this block is because you can see this downtrend here, and what I look for is the green candles that precede the down move. So you can see these green candles here marking out consolidation that led to this move down. So that's why that marks my order block. And you can see we found resistance very nicely at that level. That said, we've got this black order block here. Black represents the weekly order block. So it's called the weekly. And the way I've drawn it is it's this red candle body here that preceded this big move up. So this is a very significant order block, and we did actually break through it. So a little bit of a sign of strength by breaking through that. Now we are on the weekly time frame. It will be very interesting to see if on the weekly close we close above this order block here. So that's something to look out for. That's something I'll be closely looking at. At the moment, it's very difficult to say, are we going to be going into recession or not? This was certainly, as I say, I can count those 5 waves up. So there's certainly a shout for a retracement. But the question is it just going to be a temporary retracement, or is it going to be an economic collapse? We're still in a period of indecision, but let's not forget we've seen 10 years of economic growth. Yeah, so it's a very long period of economic growth. We are overdue a recession. So another thing to think about. Now, why did we bounce off here? Yeah, why here? Well, the reason is there's more than one chart that monitors the equities. So we've got the S&P, we've got the Dow Jones. So let's have a look at the S&P. And actually, yeah, if we look on the weekly, you can see again same Pitchfork from 2008. So wave 1, you're running flat, wave 2, 3, 4, 5. But actually on this Pitchfork, we've not broken out of the lower warning line. We've actually hit it, and that's why we found a bounce in equities in general. Yeah, so we really want to see the lower warning lines broken on all the major benchmarks for equities. So far, we've seen it happen on the Nasdaq, and Nasdaq is known to be more volatile, so it's not surprising that that was the first to break. But we really want to see it on, well, we don't really want to see it, but if we were calling, a downward trend, then we need to see it on the S&P, and then we'd need to see it on the Dow Jones also. So that's on the weekly. Let's have a quick look at the monthly, because the data goes back a lot further on the S&P. So we should have data from post-depression here, 1929. You can see again, drawing the Pitchfork, prices respected the lines reasonably, not fantastically to be honest. Here the low median line held quite nicely, and currently we are beneath the median line. So we are still beneath the median line. I would want to see if this is going to continue downwards. I would certainly want to see this median line hold. But as I say, right now we are beneath it. Let's have a look at the Dow Jones. So again, Dow Jones, post 1929 depression, we've got our Pitchfork, wave 1, wave 2, draw the Pitchfork, and I've added an extra line here. I've added the 1.5. Reason being, we hit it really, really nicely up here. You see it's this thin blue line here. Hits it here and again here, and there was a confluence. So this is the major Pitchfork, these lines here. So we hit this 1.5 line of the major Pitchfork, and the smaller Pitchfork, which is post credit crunch. This is your 2008 credit crunch. We've got another Pitchfork drawn for this one, and you can see we hit the upper median line of this one. So there was a Pitchfork confluence there, which led to this pullback. Okay, but you can see that the data that we have really on TradingView is quite clear, at least from post-depression, but there's not much information here preceding it. And I'm not sure if you're aware of any other charts. If you are, let me know if you've got any more data on that. That said, there is this picture here. So this is our depression here, 1929, and we've got about 100 years of data going up here, but there's also 100 years dating back as far as 1789. So this is really where you should start counting. Now, I've looked at this many times, and although this isn't obviously on TradingView, so it's difficult to draw your fib lines and pitchforks and whatnot. But the way I've been looking at it, I believe wave 1 was up to here in 1929, and I believe the depression was a wave 2. It's not very clear to see how you draw that. I'm thinking maybe this is a a leading diagonal wave 1, wave 2, a wave 3 here, and a wave 4. Obviously wave 4 is overlapping wave 1, making this whole thing a expanding leading diagonal, it looks like. So we've got a wave 1, 2, 3, 4, and then a wave 5, so it's an extended wave 5. Then we've got, it's actually a 90% retracement, so this isn't to scale at all. So you can see here in 1929 went up to 381, let's call it 400. We came down to 41, again let's call it 40. So it's about a 90% retracement there. So you can see, looking at this, it's certainly not to scale. It looks like it's come down about halfway. It's actually come down 90%. So very big retracement in the wave 2. Now, Elliott wave will often talk about the rule of alternation. So if you get a deep wave 2, you generally get a shallow wave 4. Now, I think that there is a shout for the possibility that we have reached the end of wave 3. So this is wave 1, wave 2, and I believe that wave 3 at 27,000 is probably the end of wave 3. There's a possibility. So that's what I'm looking out for. As I say, we need to wait for those median lines, or these, we need to see those break down further. So NASDAQ, for example, we need to see us settle beneath this lower warning line. S&P also needs to see price settling beneath this lower warning line. But that's just the grand scheme of things. That's what I'm looking at. A lot of people have been asking me how I would, where we are really with equities in terms of the grand scheme of things, rather than just looking at the shorter time frame. So that's the way I'm looking at it. There is a shout for a possibility that we're end of wave 3, which could suggest a big drop. Already we've seen a pretty big drop, so that is a 20% drop. Obviously, it's not huge, but yeah, 20% compared to that 90% post depression, it's not much. But and I think the credit crunch, 2008 credit crunch, that was a 55% drop. 1987 Black Monday, that was I think about 40% drop. This is the log scale, so it's all very warped, but yeah, so that's just a bit of an equity. As I say, I'll make a separate video on equities. There's a lot to talk about there. But yeah, this video was a Bitcoin video, and as I say, a recession in the stock market, what will that do for crypto? Now, I feel that gold used to be a safe haven where people would put their money, in times when they were afraid about, the general markets. Problem with gold is it looks like it's in a declining trend. I believe this is a W, this is an X, and this is a Y. I believe gold is going to come down further. So really, gold's not a safe haven. So for big institutes, when the markets are declining, they need somewhere else to put their capital. Of course, they can short the markets, but I believe they generally like to have a diversified portfolio. And I've got a feeling they may be shifting money into crypto. I do believe crypto is the future. I believe we're going to see a lot of negative media about crypto over the next few months, and probably even longer, allowing that liquidity for big institutions to accumulate, along with a very ugly looking stock market, which will further scare everyone off. So that's what I'm expecting. But as I say, there's no recession or anything confirmed yet. It's a long way to go. Obviously, we need 2 successive quarters of economic decline to call any recession. That's the official way of looking at it. But from a TA point of view, the markets aren't looking too good right now. Yeah, so Bitcoin, as I say, could get a bit of a bounce here. And I would expect another move down to this blue line, that's your 3,000 level. And yeah, I'm going to wrap it up there, guys. I think we've covered everything I wanted to say in this video. So I hope you've enjoyed the content. Thank you once more. Social media channels are growing, YouTube, Twitter. Thank you for buying the course. So you guys who have bought the course, the idea is that we're gonna share our ideas eventually. Eventually, I will organize some kind of group where we can share our ideas, our trading setups, because I only have one pair of eyes to look at these setups, and there's so many good opportunities on a daily basis. So if we're all using the same techniques, which is what I want to, educate my followers to have, then we're going to be able to capitalize on these opportunities a lot better. So that's the idea. Eventually, there will be a group where we can share our ideas. So that's something I'm working on. Yeah, the group. If you're interested, not the group, but the course, you can get that at wave618.com. Yeah, so far excellent feedback. Like it's been really good. So yeah, onwards and upwards. Gonna wrap it up there, guys. All right, take care.